So let's say I'm wrong and there's more pain to come, which a lot of the crypto markets think. So let's say the downside is 40% from here.
Mm-hmm.
Okay, that's a decent sell-off from here. What is the upside? Well, every time you've gotten to the bottom, it's around 10x, maybe more.
Right.
And depending which token you choose and how well you allocate your capital. So 40% downside, 10x upside, that risk reward is enormous.
It's actually more than 10x, but yeah, I mean, it's only happened a couple of times where it's really a true bottom of the 2 standard deviations below, right? But that's 40x, a little bit above.
But even if it's 10x, 20x, right? The number
crazy.
It's huge, right? So that's one of the best risk rewards you'll ever be given in your career. What's amazing about crypto, why it generates so much wealth, is because you get repeatedly given these.
Yeah,
and that's why technology is done amazingly for people as well. Technology investing.
That's right.
Because people have this mean reversion mind frame and they think it's all over. The reality is it's always going up to the right, just within these volatile bands.
Macro guru Raoul Pal says that digital asset markets could be gearing up for a major trend reversal to the upside if one main metric is any indication. Pal says crypto markets are mostly driven by the liquidity that comes from M2 money supply. In a new interview with Bill, the CEO of Abra on his YouTube channel, Raoul Pal says Ethereum is set for a series of supply shocks that could help the second largest crypto asset by market cap vastly outperform Bitcoin once again. The Real Vision CEO says that Ethereum's shift to a proof-of-stake system, which is tentatively set to happen in September, will likely eliminate significant amounts of sell pressure as participants take their coins off the market and stake them for yield. He also mentioned that there wouldn't be any price drops by miners to cover their operating expenses, unlike with proof-of-work blockchains. According to Pal, there shall soon be a supply cut of enormous proportions as miners will no longer be present. Currently, a total of $1 or $2 billion a month is not sold. However, after the sell-off, there shall be no constant pressure from miners who have received the Ethereum rewards. Before we listen to Raoul Pal on his reasons why he believes Ethereum will continue to outperform Bitcoin, we want to use this opportunity to say we appreciate you so much for watching our videos. Thanks for the support. Please give this video a like and subscribe to the channel if you are yet to do so.
So what have we got going on in ETH? We've got a gigantic supply shock. So what is the supply shock? The small supply shock is right now, every day, miners are selling ETH. They probably sell 80% of everything they receive because they need to pay for their cash flows and their electricity and all of this stuff. So they stop. That's about 1 or 2 billion a month. Okay, that's nice. But then after that, we've also got the fact that staking is coming.
Mm-hmm.
Currently, there's about 9% of all ETH staked. Now, estimates are it should go up to around 30%. What does that mean? It means 30% of the ETH comes off exchanges, comes out of DeFi, comes out of CeFi, and is untouchable.
Yep.
Right? You're removing a gigantic amount of supply from the market, and it's locked for a year. So you can't do anything about it. Yes, you can trade using staked ETH and stuff like that, but it's not the same thing. So you've got this. So you're taking that out of the market. So you've got a huge supply shock. On the other side, you've got a massive demand shock, which is firstly, a lot of institutions wrongly didn't like Bitcoin because of ESG concerns. Proof of stake gets rid of that. Additionally, it now has a yield. So that's something that institutions love, is a yield. So now you need to make one asset allocation decision, which is, I believe in this Web3 technology world. So where do you allocate? Bitcoin or ETH? It's going to be ETH. Why? Because you're going to get something between a 6 and a 10% yield.
That's right.
So that's extraordinary. Yep. And you've got this deflationary issue of burning the tokens based on network activity. So that's another massive supply shock. So there's less ETH around every year. It's getting locked up. And you've got no miners. Put against this massive demand shock, and we've got the macro cycle turning. I look at this and think, holy shit, this is a massively imbalanced supply and demand situation.
And you've alluded to why. Do you hold Bitcoin still?
Barely, which I know everybody hates, right? Barely. Not because I don't like Bitcoin or don't think it goes up. I just think it goes up less. We're looking at this as a technology and a network adoption model. So you want to back the network that's growing the fastest and has the most number of applications. That's the safest, easiest allocation. That happens to be ETH. Now, other earlier stage tokens, whether it's Solana or AVAX or whatever, are getting earlier on the adoption curve, so you get that accelerated phase, so they'll probably outperform. But if you're just thinking the safe, easy bet, we're now looking at the internet. The money of the internet is ETH currently. Nothing is exchanged in
That's
Bitcoin.
right.
I mean, literally nothing. So the money of the internet is ETH. DeFi is built on ETH. NFTs are built on ETH. All of this is being built on ETH. ETH now has a yield. Yeah. Stable coins are on ETH. And ETH has a yield. Okay, what's left? Yes, it's not fast enough. So people go to other chains for that. It's a bit more expensive. People go to other chains. But the broad encompassing of the space, this is the simple, easiest bet to take.
Will you do other crypto allocations to the Solanas in smaller amounts to, potentially look at that 100x upside given where they are in the adoption curve? Or is there no point given the numbers we're talking about?
I just don't think I'm good enough, and I don't have the ability to spend all the time in the space. So that's one of the reasons I started the asset management firm, so I can allocate it to hedge funds whose job is that.
That's
so
what we
so
did.
I do that.
Yeah.
But I do have a few bets. So I have a small basket of like DeFi, Uniswap and stuff like that, Aave, whatever. But I also have the only other bet I'm taking really is Solana. So I've started to build a reasonable position in Solana because it has the next most number of developers, the network activity, and it's clear that their mission seems to be to use it as a blockchain for the masses. So, music, gaming, all of that kind of stuff. And I think the next phase is that. The next 200, 300 million people are going to come out of mass adoption and not from crypto heads like you and I who've been around for a while. And so I think Solana's a reasonable bet. Now, the chain breaks. It's not perfect. All of this stuff, nothing's perfect. And that should be at the price. We all understand that.
The former Goldman Sachs executive says that the charts support his hunch that Ethereum is about to outperform Bitcoin. According to him, Ethereum and Bitcoin is getting ready to break out of a multi-year descending channel, making Ethereum a far more interesting bet for the macro investor. So I think a lot of this activity is getting very interesting. If I start looking at price, we've talked a bit about Bitcoin, but if I look at the chart of Ethereum versus Bitcoin, to me, it's very close to breaking out of this downward channel. And as you know, I've been overweight Ethereum for a long time now, and it's paid off very well. And I expect it to have another leg higher. So I'm more interested in Ethereum than Bitcoin. What do you think of Raoul Pal belief that Ethereum will outperform Bitcoin? Even though we are heavily invested in both assets here at Savvy Finance, we have been recently buying more of Bitcoin than Ethereum. Maybe we should be investing more on Ethereum. What do you think? Let us know in the comments section. Thanks for watching.